All right, today we are diving deep into Robinhood. Now, they've had some absolutely explosive growth, but they're also facing some pretty serious headwinds. And that leads to the billion-dollar question that's on everyone's mind. What does their future actually look like? Well, we're here to break it all down. So, you know what? Let's just get right to it. The big question is, can Robinhood's stock actually double by 2026? I mean, that's a really bold claim. And to even begin to answer that, we have to look at both sides of the coin. The incredible potential for growth and the very real risks that are staring the company right in the face. And look, we're not just going to be speculating here. We are going straight to the sources. Everything we're talking about is built directly from Robinhood's own Q3 2025 financial report, the one they filed with the SEC, and a critical analysis from A Invest. This is the raw data that tells the real story. So here's our game plan. First, we're going to dig into the bull case, which is all about that explosive growth. Then, we'll flip the script and look at the bear case, a real minefield of risks. After that, we'll get into the wild cards, things like lawsuits and innovation that could change everything. And finally, we'll wrap it all up with what you should really be watching. Okay, first up, the bull case. And honestly, when you look at these numbers, it is so easy to see why some folks are incredibly optimistic about where Robinhood is headed. The sheer scale of the growth here, and remember, this is coming straight from their own financials, it's really something else. We're looking at a year-over-year comparison from the third quarter of 2024 to 2025, and these numbers are just staggering. So let's break down these three key metrics one by one. First off, total net revenues, they literally doubled. A 100% increase in a single year. That is the kind of number that screams hypergrowth. It shows their ability to actually make money off their platform is speeding up and fast. Second, let's talk about the money that's actually on the platform. Total platform assets shot up by an incredible 119%. Now, what this really means is that more customers are bringing more of their money to Robinhood. And, this is key, they're leaving it there. That's a huge vote of confidence, and it builds a really strong foundation for future revenue. And this one points to something really important. Their move towards more stable, recurring revenue. Robinhood Gold, that's their premium subscription, saw a 77% jump in subscribers. So it's not just that they're getting more users, they're getting more users to pay them every single month. That's a game changer. Okay, but for every bull, there's a bear, right? And the case against Robinhood is just as compelling. So now let's pivot and look at the pretty significant risks that could completely derail this whole growth story. This quote from A Invest really gets to the heart of the problem. A huge chunk of that incredible revenue growth we just saw, well, it comes from the most unpredictable parts of the market, especially cryptocurrencies. So yeah, when the crypto market is on fire, Robinhood soars. But when it goes cold, their revenue can take a massive, massive hit. And then there's the very core of their business model, something called payment for order flow, or PFOF. To put it simply, this is how Robinhood can offer you commission-free trading. They get paid by big market makers for sending your trades their way. Now, it's legal, but it is super controversial, and it is under a massive regulatory microscope, mainly because critics argue it creates a potential conflict of interest. And here's the crucial point. This core revenue stream is seriously at risk. Their own financial report lists out these threats. We're talking heightened scrutiny from regulators like the SEC, new rules that could directly chop into their income, damage to their brand, and even the potential for new laws that could ban it. And critically, a lot of their competitors are way less dependent on this one single controversial way of making money. And speaking of competition, man, Robinhood is getting squeezed from both sides. You've got the old school giants like Charles Schwab who are getting better and better with their digital game. And then on the other end, you have crypto native platforms like Coinbase who are also expanding their services. The market is just getting crowded really fast. Now this slide shows a potential crack in the armor. On the surface, yeah, their year-over-year growth of 2.5 million funded customers looks fantastic. But when you dig into the A Invest analysis, it points out a drop of 130,000 customers in this single month of November 2025. And that really begs the question, is their famous user growth starting to slow down? So we have the bull case, and we have the bear case. But what about the wild cards? The unpredictable things that could completely change the game for Robinhood. The innovations that could send them to the moon, and the legal battles that could drag them all the way down. Let's start with the good stuff, innovation. Robinhood is definitely not standing still. They are aggressively pushing into all sorts of new areas. They've bought companies like TradePMR to get into the financial advisor space and the crypto exchange Bitstamp to expand globally. They've launched brand new products like the Gold Card and 24-hour trading, and they're expanding into Europe. These are their big bets to diversify away from all those risks we just talked about. But the other wild card is a big one: lawsuits. Just look at this timeline. This shows just one of their major legal battles, this one related to their IPO. A court initially threw out the lawsuit, but then a higher appeals court recently brought parts of it back to life. I mean, as you can see, this has been a nearly 4-year saga. And it's not just a distraction, it's a constant, expensive, and totally unpredictable threat. And it's not just that one case. Oh no, their own report details a whole laundry list of legal and regulatory challenges, from the 2021 trading restrictions controversy to how they handle customer cash, and even litigation over event contracts in 6 different states. Every single one of these carries a big financial and reputational risk. Okay, so we've seen the explosive growth, we've walked through the minefield of risk, and we've touched on the wild cards. How do we bring this all together? Well, it really seems to come down to 2 very different potential paths for the company. This slide really lays it all out side by side, the 2 possible futures for Robinhood. On one hand, the path to doubling its stock price really depends on them continuing that explosive growth, making those big acquisitions like Bitstamp a success, innovating with new products like the Gold Card, and expanding around the world. But the plunge scenario? That gets triggered by a regulatory crackdown on PFOF, competition getting even tougher, all those legal liabilities piling up, and the constant volatility of their key revenue streams. So we end up right back where we started. Can the stock double by 2026? Look, the potential for explosive growth is undeniably there. It's written right in their own financial reports, but the risks are just as real, and they are substantial. So the ultimate question becomes, is Robinhood building a sustainable financial empire, or are they building a spectacular house of cards? Only time will tell. Thanks for joining this explainer.